I think there's really limited scope for the president to do much in the way of further fiscal stimulus. I mean, a lot of what markets are talking about right now is, for instance, the extension of the payroll tax cut and the extension of unemployment benefits. But at the same time, I mean, we saw this through the debt ceiling debate and the debt ceiling debacle, I'd say, that the Republican minority has, or actually the majority in the House, really has veto power against anything, and really they're going to reject anything that resembles fiscal stimulus just because they are so entrenched in their fiscal deficit hawk mode, let's say, because of the influence in the increasingly conservative Tea Party. There's really limited scope for the president to have any major effect on financial markets, in my opinion. If anything, the markets might be setting up for a letdown if the president isn't able to pledge continued fiscal support for what is clearly a worsening macroeconomic position for the U.S. economy.
So do you expect to see more U.S. dollar short covering following Obama's speech on Thursday?
What it really comes down to, in my opinion, is that there's really only one bet in financial markets right now. It's either risk on or risk off. So when the sun is shining and everyone's really bullish and they're chasing high yields, they're selling US dollars because it has the second lowest interest rate of any industrialized economy, of any industrialized currency. So it's really cheap to borrow US dollars to then finance positions in the Australian dollar, for instance, which offers a 5% yield advantage over its US namesake and in stocks and what have you. So when the sun is shining, the US dollar is probably going to fall because it's so cheap to borrow it to finance higher yielding bets. When the opposite happens, when traders turn defensive, it's not even an active bet. They have no choice but to cover those US dollar positions to maintain proper margins in their other leverage bets. So what you're really going to see, in my opinion, is if stocks continue their recent tumble, the US dollar is almost certainly going to strengthen.
And how would you suggest US dollar investors to position themselves in the week ahead?
So right now what I'm really looking at is the Euro-US dollar pair in particular, just because we did break a fairly well-defined consolidation pattern dating back to May lows. I think that the Euro's break below key ascending triangle support really offers risk to the downside. So what I'd really like to do in the short term is perhaps sell Euro rallies, targeting a return to May lows at minimum, and perhaps the US dollar trends higher into the remainder of the year.